Hello and welcome to BQ Prime. It is the first day of March series that we're tracking. Markets are pretty much volatile in today's session. Clearly, if you go to see Nifty is trading below the 17,500 mark, Sensex is trading with cuts of nearly almost little over 150 points, and we are below that 40,000 mark as well in terms of the Bank Nifty. To discuss more in terms of what's in store for the March series and what the rollover data of Feb series is indicating, we have Gaurav Bissa, Vice President at Incred Equities, joining in. Gaurav, welcome to the show and a very good afternoon.
A very good afternoon and thank you for inviting on the show.
Always a pleasure. Gaurav, my first question coming to you is if we see the February series rollover data, firstly, what is that indicating in terms of the positions that have been rolled over in the month of March for the March series, and what is the open interest data indicating?
There are two things which are quite important to note. One, if you look at the rollover data, you will find that the terms of percentage rollovers, it is less compared to the 3-month rollover average. So Nifty witnessed rollover around 73% against the average of 79. One can argue that this is kind of short covering that we have seen. Saying that rollovers have been weak on the short side. But if you look at the total open interest base, the total open interest concentration has been around 15.4 million shares as compared to 11.6 million, which basically means when the Feb series started, after that, we have seen incremental shorts getting built, and we have seen that reflecting in the price action as well. We have seen a significant fall, and that resulted in increment of your open interest build-up. And based on that, we have seen that though the percentage is less, we are seeing actually more number of shorts getting created. So I am not expecting a very sharp rally as such. Yes, that can be short covering, but we need to identify whether it has already started. For the time being, at higher levels, we'll see some pressure building up in Nifty. Second interesting point or important point to notice, Bank Nifty, where it is again near slightly lower than the averages, 84% against 86%. But again, the number of total OI shares at 2.8 million shares compared to 2.57. I think that also indicates that the incremental shorts have been built and have been rolled over for Bank Nifty as well. And this is the index that has been quite weak. It has been pulling Nifty index also down. So as long as this remains weak, your Nifty will also have very limited upside. So the bias right now remains cautious. I would not be aggressively short as we are near the immediate support area of 17,350. But below this, I think it will open gates for 17,000 as well.
Right. So overall, are we trying to say that currently, till we continue to close below the 17,600 mark in terms of Nifty, that can result, in further selling pressure? But the moment we are above those 17,600 levels in terms of closing basis, there could be some bit of stability that could emerge.
Yes. So the idea is that as we discussed, that when can short covering start? Nifty had decent support at 17,580, 17,600. There is also where the 200 EMA on daily charts also placed. So if it sustains above these levels, then probably we can see one round of short covering happening and it can push Nifty to higher levels. But if that is not the case, then Nifty has already forming lower tops, lower bottoms. So price action is weak. It's below the averages as well. It has already seen a good amount of short orders as well. If you look at the option data as well, which started with 18,000 significant option writing in terms of calls, it went to 17,800, then it went to 17,700, 17,600. So that also is giving a lot of confidence to call writers as well. So in that perspective, yes, if it's not conquered, or at least your call writers will not be forced to cover the positions. Once they start covering the positions, even the futures, somebody was shorted futures, then may also start covering the futures as well. So for that effect to start, Nifty will have to sustain on a closing basis about 17,600.
Right. Simultaneously, the kind of weakness that we've seen already in the month of February series, one of the main reasons is the weakness that we saw in terms of Bank Nifty as well, which translated into Nifty 50, right? So overall, if you see in terms of the rollover data for Bank Nifty for the Feb series, what is that indicating right now?
See, Bank Nifty has seen again incremental OI positions, which means fresh shorts were created. They have been carried over as such. So you may one may argue that the percentage rollover is less, but your OI base has increased. So what this basically indicates, one cannot say it is aggressively long because we have seen Bank Nifty is trading at low point of the month. I'm not just talking about series, the entire Feb month. It's at the low point of that. So it has to be incremental shorts that have been created, have been carried over. Individual stocks, if you look at from that perspective as well, even they are not faring that well. So whether we're talking about something like HDFC Bank, we have seen some incremental shorts getting built. Whether we're talking about IndusInd Bank, there also we have seen shorts getting rolled over. Whether we're talking about ICICI Bank, there also we have seen rollers getting short rollers getting carried over. So in perspective, not just your Bank Nifty, but the individual counters, heavyweights, they are also not signaling that there can be a very strong pullback. Yes, there can be a pullback, but for that we need to wait. There has to be a confirmation. We cannot say right away that there will be short covering. There has to be a reason when the short covering starts. If not the reason, then the effect has to be seen. So either the effect or the reason. Till then we don't get either of these two, I would not be playing for a very major bounce in the convention.
Right. So overall, what are the key support and resistance levels that we should be watching out for in terms of Bank Nifty as well? Because if, we're already trading low, 39,900 is where we are at somewhere right now. But below that, what is the key level we should be watching out for, from where there could be increased selling pressure that could come in?
That will be the levels of 39,500, and this was the panic low it made, and after that it formed a very strong pullback, and it went towards sort of 42,200 around those levels. So we had a very strong rise from those levels. So it will be important to see whether we are sustained. So a close below 39,500 would be extremely bad for Bank Nifty, and which can in turn be bad for Nifty index as well. So in my opinion, that is going to be the most important level for March, even for April. Till the time we are not closing below that, 39,500 is going to be the most important level to watch out for on the spot side.
Right. Until the time we are able to maintain above the support levels, is there a possibility of a temporary bounce back that could come in terms of Bank Nifty? And if yes, what will that resistance level be then?
See, if there's a short covering that is seen, right, and I'm not saying we buy right away, but if we see a short covering coming in, it might even head towards the level of 41,000 on the spot side. See, the simple reason is that we have seen a very strong, if you look at daily candles also, we have seen every candle is going, is getting weaker, right? And if that thing stops, and if you're seeing short covering happening, one or two large private names, even they support, then this short covering rally can lead towards 41,000. If that sustains, then we can look for higher levels. But the point to note is that 13,000 is 13,500 is the key level to watch out for. And if that sustains, 41,000 can be on the cards, and that can happen very swiftly depending upon whether we are seeing short covering right away or after 3 or 4 days.
Right. So that's with regards to Nifty as well as Bank Nifty. Now, moving on to stock-specific action, today's day of trade, there is good strength coming in with regards to an ONGC as well. What's the sense that you pick up in terms of ONGC? Because and if you have to look at it from a March series perspective.
See, there's not much of an interest. Even if you look at the rollovers, it's in line with the averages. But a rollover of 73%, I don't think that it generally does not show you too much of interest. Yes, if it sustains level of 158, 160, we can see a move coming in. That will be more of a technical breakout sort of coming in. So if you are looking in terms of FNO positions, then I cannot give a supporting comment that there's a very strong position getting built. Had it been aggressive longs, and then we can say yes, that can happen. Probably if it closes up 150, 160, we can see some long positions getting added. Once that happens, I can give a supportive comment that yes, even the longs are getting added. At this juncture, it is more of a technical breakout that one can see about 150, 160. In terms of FNO, I don't see too much of a interest getting built up.
Right. Simultaneously, if you see an Asian Paints, last couple of trading sessions have been weak with regards to an Asian Paints. Today, we are seeing some bit of a recovery that has come in as well. What are charts indicating with regards to an Asian Paints?
See, there has been decent amount of rollovers that we have seen happening. A good part is we have not seen incremental short rolls getting carried over. But then the fact that it has seen good amount of short rollovers, it generally shows that there can be some pressure at high levels. The positivity would come either if somebody is a very big risk taker, then probably the previous swing lows of 2680 would be key to watch out for. Below this, some more pressure building up. And the short term, I'm expecting once it sustains above level of 2050, then we can see March series turning out to be slightly better for Asian Paints. Till then, it does not give a sustained move above 2850. There will always be a sword hanging on the neck. But things will get much better once it sustains above 2850.
Right. Apart from that, in terms of the metal pack, that has been pretty weak in today's day of trade. Tata Steel, JSW Steel, as well as Hindalco, all these three stocks have been seeing cuts to the tune of almost around 2 to 5% in trade. Are we expecting this kind of weakness to continue in metal counters? What would you advise an investor to do?
See, there will be, if you look at the F&O data, then you will find that we are not seeing fresh longs getting built. So it was more for price action. Prices were going higher, but we did not see a similar kind of thing being added, right? So if you look at the averages of last three of these, I'm talking about the averages of the entire sector, not just stock specific. The cumulative OI additions have been not very high. So it was more of price action. It has formed double top. It's giving a breakdown now. So I'll be a little bit negative on the sector as a whole. As long as Hindalco trades below levels of 424, it can head towards 400 even below that. Same goes for Tata Steel as a support at 100. Bounce back sort of coming in, but at this stage, I would not be recommending fresh additions. Whether long or short on rise, one can create short positions, but at the current juncture, I would recommend that stay away as far as long positions are getting built.
Right. Another stock I want to talk to you about is Vodafone Idea. The volumes have been pretty high in terms of Vodafone Idea. The stock is up also around 2.5%. And if you see in terms of the open interest addition, that's little over 3%, in terms of real time right now. What do you make of an idea?
See, to be honest, this is a stock which I have avoided. I don't remember even into my clients for last 3 or 4 years, even before that as well. This is something I totally avoid. And especially when it comes to F&O, I don't remember if I've ever given any call, even for a buying out of money call, out of money put. I even avoid that as well. I would not be in the position to give a view on that. See, it's a very finicky counter. It can move up 10-15% if there's some positive news flow. It keeps trading in a range. So I think it's best avoided. And there can be a lot of swings, up and down swings, which can take the F&O traders by surprise. This is a stock that one should definitely avoid.
Right. What about the GAIL? Again, that stock is pretty active in trade today. 5.5% is the kind of up move that we're seeing in the cash market. And if you see in terms of the volumes as well, they seem to be pretty high in today's session. The open interest addition is almost around 23 to 24%.
See, this is getting better. This is the level from where we last witnessed a failed breakout. It started falling down from the current levels, and that resulted in long unwinding as well. So, if it's sustaining these levels, I think it can continue to do so, and it can fare much better in coming days. If a close above 103, 104 on Monday again can result in a very strong upside, it can head towards the level of 115 in the current series.
Right. One more name, Gaurav, is a Z Entertainment. I mean, yes, it is a news-backed movement that we are seeing in terms of Z Entertainment, but overall, the stock is down around 2% in trade today. The recovery that we saw in the second half of the trading session yesterday also was spectacular, and we are seeing some bit of open interest shedding that's coming in on the counter as well. What would you recommend a trader to do?
See, if one can avoid, I would again say avoid this name. When it's not just about the news flow, a stock which made such wild swings, it becomes very difficult to trade. If you're a positional player, you can always you can keep a 10% stop loss and you can play right in delivery. When it comes to F&O, a 3 to 4% swing can also result in significant losses if you're playing with multiple lots. So on that perspective, I will say that avoid this name. The supports are placed at levels of 170, 168, and the resistances are currently placed at levels of 210. So this is going to be between a small range. Let it come out of the range. Let us see if the position is still getting created. Then one can try to take a view. But at this stage, I would avoid it.
Right. Apart from that, IDFC First Bank, it's a pretty flat move, but the open interest addition is pretty strong in that counter. What's your view?
See, IDFC First, and it's just bouncing near to the previous swing lows of 52. If that holds, I think one can buy and one can play probably for targets of 57. I would not play for a very major trade. There's a very strong multi-year trend line resistance at levels of 61, 62. So even if I'm playing at the current junction, the risk reward is in favor. One can probably play for an upside, but it will be very limited upside. I would not play for a very major up move from the current junction.
Right. Overall, if you see in terms of Ambuja Cement, the stock is up. We are seeing some of open interest shedding on that counter. And cement stocks have been in focus as well over the last couple of trading sessions. Your view, what should an investor do with an Ambuja?
See, if somebody is looking for investment, I would say buy around 320. I'm talking about in delivery with somebody having a view of 1 year, 1.5 year. This is a level from where we have seen the last bounce coming in. There's a major moving as support over there as well. But if somebody wants to play on a very short term note, totally avoid. As I said, it's not about getting things right. It is about one getting the exit at the right price. Second, when the volatility is so high, yesterday it was trading at day before, I think it was around 360, 365. It went to 340, 345 today. So such large swings, it becomes very difficult to predict, very difficult to play. So in my opinion, there are many stocks, and always go with the trending stocks rather than high volatile stocks, because getting a stop loss triggered on either side, it becomes quite prominent.
Mm. Right. And your view in terms of Glenmark as well, that's seeing some bit of open interest shedding. Similarly, you have a Biocon as well, that's seeing some amount of open interest shedding as well. And I think both the counters in terms of pharma space are in focus.
See, pharma space as a whole has been under the doldrums, and I'm not seeing. If you look at the rollover data as well, or the sectoral plot, there's not much to add over here. See, there can be bounce back. It's fallen significantly. There can be technical bounce back, sort of, but it does not give me too much of confidence to be long in these names. Probably Glenmark, if somebody wants to trade, then yes, if it sustains above levels of 440, I would then trade. Till the time it is not sustaining above 450, I think one should totally avoid that. It can give a case of
Mm.
false breakout and it can fall significantly lower. So, in my opinion, I would avoid pharma names at this point in time.
Right. Gaurav, apart from the names that we've discussed, anything that caught your eye in today's day of trade, which could be good bets from a Monday's perspective that we should be watching out for?
See, there are two names. One is Gujarat Gas, where we have seen very strong positions getting added. It's added almost around 19-20% positions. And it has seen 19 to 20% higher rollovers compared to averages. And we are seeing some good price action move as well. So if it sustains above 5 and 10, I think that can move towards 545, 45. It's on the cusp of a breakout as well. So in my opinion, this is one that would be on my radar. Second would be on Hindustan Aeronautics, where we have also advised to our clients is trading near the breakout retest area. So you can probably keep a 2% stop loss. You can play for 7-8% upside. So in my opinion, these two names can give you some good returns in next week.
Right. So these are counters we should be watching out for as well. But overall, thank you, Gaurav, so much for joining us on the show and giving us your views in terms of what the March series would actually mean for us and what are the levels we should be watching out for as well. Thank you for joining in. But overall, if you see in terms of markets, in terms of Nifty 50 as well, 17,465 is the level, cuts of around 0.3% coming in there, as well as Bank Nifty as well is at around 39,905. Again, a 0.3% kind of cuts coming in on Bank Nifty. If you see in terms of the Sensex as well, in terms of closing rates, what we're tracking is a number which could be below 59,470, 59,463 is where the Sensex is as we speak. Overall, apart from that, in terms of the stocks we should be looking at, or the ones which are the top gainers, clearly you have an ONGC, Divis Laboratories, Asian Paints, Bajaj Finance, as well as Coal India. These are the top gainers in terms of Nifty 50. Whereas the metal pack has been pretty weak. It's the metal index, which is the top losing index in today's session of trade. And in terms of counters, you have a Hindalco, Adani Enterprises, M&M, JSW Steel, as well as Tata Steel, which are the top losers as well. If you see from the broader markets, Electra, I beg your pardon, on the back of the hydrogen bus unveiling in partnership with Reliance. That stock has hit 20% high in today's session of trade. Mahindra CIE, in spite of posting a loss, that stock has seen gains of around 15 to 16% in today's session. Indiabulls Real Estate is up in trade. SpiceJet reported numbers, and that stock is up a little over 13%. Global Spirits, another one, which is seeing smart gains. Hindalco, we already spoke about. RB Infra continues the downward journey for a second consecutive session. And you have Adani Power and Adani Transmission as well, which are trading under pressure. But overall, a slightly muted day of trade, but clearly the volatility was high in terms of where markets were concerned. We started off the March series on a positive note, but not really able to sustain those kind of opening gains that we had seen. And clearly, as Gaurav was also mentioning, there are three levels that we should be watching out for. There could be some bit of consolidation, but do not see a major downtick or a major upward move that could be on the anvil. That's all that we have on this session. Have a great weekend. Thanks for watching.